I want to start with a caveat myself. I'm not an expert on crowdfunding, and maybe that's evident by the fact that I didn't get the memo about not wearing a tie in Northern California. So, but my old mentor told me that if you know 1% more than someone else, it makes you an expert. So hopefully that there's something within this report that makes you leave today with 1% more knowledge about crowdfunding and its impacts in the developing world. I want to start with a story. About 1 hour of hydrofoil outside of Ho Chi Minh City, there is a company called Wow Automotive, and it's an electric car manufacturer run by the founder and CEO, Randy. Randy is trying to raise about $100,000 to finance about 20 to 25 electric vehicles, and he's struggling to do so. There are a range of reasons why that is. And they're pretty much, it's a constant picture around across a number of the countries that I work in developing markets. One, the bankers and the investors do not understand the market, the technology or the business model of Randy's idea. They are requesting onerous terms on the amount of collateral, sometimes upwards of 120%. The interest rates on loans for small business in developing countries, especially Vietnam, can be upwards of 15 to 20%. And the whole process of accessing loans for small companies and startups is very opaque, and you often have to be in the know with the banks and have those established relationships. So the research question that this study aims to answer is, how can crowdfunding be a promising mechanism of channeling funding to entrepreneurs in developing countries like Randy? And we want to be able to give Randy and his peers access to this funding to help them better start, innovate and grow their businesses, to create much needed jobs, wealth and products that have a meaningful social impact in their communities. So a little bit about myself and InfoDev. InfoDev is a unit within the World Bank that's focused on promoting innovation and entrepreneurship in developing countries. We mainly do this through investing in and supporting venture accelerators, incubators, and other startup development programs. We're interested in this study, and the reason why we came up with it, hopefully wasn't half a lifetime ago, but maybe a year ago now, was to really start and spark a discussion around the opportunities for crowdfunding in developing countries. And we really want development organizations, country governments, and our own institution, the World Bank, to really stand up and take notice of this emerging industry. The industry, however, is not without its risks, and the organization that I work for is especially attuned to the kinds of risks that crowdfunding poses. There are still many uncertainties. However, there is also huge market potential, and in a relatively short amount of time that crowdfunding has been in existence, it has helped channel many billions of dollars to hundreds of thousands of projects around the world. Many of them, and we're seeing this now, many of them have applications for developing country markets as well. One of the things that the report aims to do is, in fact, to quantify this market potential. And through some initial modeling, that market could be up to upwards of $90 billion annually in the next 25 years. And I'll leave Jason and Woody to talk a little bit more about that. What are our interests in looking into crowdfunding? There are 5 main ones. One, we want to help to democratize and disintermediate the process of raising capital for entrepreneurs in the developing world. And this is especially important for marginalized groups such as women or youth or populations that live in rural areas. 2, we want to help accelerate the innovation process, and crowdfunding hopefully will enable the kinds of companies and entrepreneurs that I work with on the ground to better understand their markets, and innovate more rapidly and also hopefully succeed or fail quicker. 3, we want to enhance the overall entrepreneurial ecosystem and using crowdfunding as the glue that ties communities, individuals, and institutions together. 4, we want to better understand and document the experiences of raising capital in these markets and hopefully be able to learn some very valuable lessons that we can then transfer across borders. And 5, we want to know how mechanisms like crowdfunding can be used to augment and enhance the reach, scale, and impact of our programs, our accelerator and incubator programs on the ground, one of which, and this is a large section of the report, is on ways that InfoDev's Climate Innovation Centers, and that's a program that I work on, can help leverage crowdfunding. So I'd like to turn over shortly to Sherwood and Jason. It has been a real pleasure working with these guys on this report. I have maybe a little too high expectations, so I have often put them to work at all hours of the day and night across multiple time zones. So I really want to thank them for all the hard work that they've put into this, and also to Richard for his academic and research rigor that he's applied to this report. We're very welcome to have your thoughts and feedback on it. This is a starting point. It is a thought leadership piece. It's a platform to spark discussion around the topic. So we welcome collaboration and ideas around how we can improve this. The work doesn't stop here, though, and that's the message I really wanted to drive home today. We will be taking, in the next phases of the work on crowdfunding, we'll be taking this to the field, and we intend to do a number of different activities around training, around capacity building, around linking in with the climate innovation centers, and actually seeing under real-world conditions how companies that we're working with can really use crowdfunding and learn from how they succeed or fail to do so. And welcome conversations around partnership opportunities for that next phase of work as well. So I'll hand over now to Jason and Woody.
Hello, everyone. It is great to see you. First, I want to actually thank the Berkeley and the Fung Institute and Lee Fleming for helping pull this together. It's exciting to see a group of individuals here. I think for us, one of the most exciting things is to see people that have helped us all along this route of making this from an idea into a law. The World Bank report represents a starting point for a discussion. It's a dart on a board. And it frees us all to have a discussion around it. If, in fact, Berkeley would like to hand out honorary PhDs, Jason and I are open to receiving. After we received Jason and I know each other because we got our MBAs together from Thunderbird. And I think both of us decided after that experience there would be no more degrees, but, honorary ones are always welcome. What I do love about this event, though, as well, is the fact that this really does set the research agenda going forward for crowdfunding. This isn't just about entrepreneurs like ourselves that have a great idea and want to go out and start something and are passionate about it, but we need capital. It's about what's the data and what's the statistics and how viable is this as a funding mechanism. So it's really critically important that we have people like you helping us set that research agenda going forward. For us, I think this is completely timely because we were asked to testify at a U.S. Senate hearing the end of this month. And so I got that email yesterday, and I confirmed our availability. And now I have lots of data to include in my testimony. So if all of you that have presented papers could give me a one-page summary with the key findings that I just need to put in there, I promise you I will mention in front of the U.S. Senate at the end of this month. So just to put things into perspective on this, to lay the ground, because we're doing a couple things here. We talk about how crowdfunding can have an impact on the world globally, and people look at it from 2 points of view. They're like, well, this is something that can only happen in the United States, and this is not something that can happen in our country. And then other people are like, what are security regulations? And so for that, we say we've got two things. If you don't have a security framework in place, we can help you with that, and we can help you craft enabling legislation to facilitate capital formation. And that's really what the basis of this paper is about, to help policymakers and stakeholders understand what crowdfunding is and what kind of policy they need to create that's proper for their environment. For others that might think that this is something that we can only do in the United States of America, we like to let them know that Washington is not the place that things are working properly. You might have noticed this over the past couple weeks. Just to let you guys understand what we were up against when we went to Washington to turn this into law, there were 10,200 bills introduced into Congress the year that we showed up and decided, hey, we have an idea. That's 10,200 groups of people with a vested interest. There's many more that showed up there that did not get a bill introduced to Congress. That year, about 220 bills were signed into law by the President of the United States, of which 7 were a substantial piece of legislation. So for those people that think this is something that can only happen in the United States of America, we like to say, listen, when you're talking about jobs, when you're talking about innovation, when you're talking about opportunity, it doesn't matter if you're a Democrat or Republican. It doesn't matter which side of the aisle you're on. We are about helping people live up to their born right, and that's to live up to their destiny. And this is a mechanism to actually allow people to do that. We live in a collaborative community today. It's only right that we actually take finance to that level too. And so that's what this is about. So jumping right on in. This is not about microfinance. This is not about funding companies that need access to capital in the public markets. This is about finding a solution to the people that have the hardest problem getting capital. That's $25,000 to $250,000 of revenue. This type of money that's missing in the marketplace is the same type of money that's missing globally. We found this as we've consulted with clients around the world. So it's been really exciting to see the potential that people see in this as we travel to these countries. We see that crowdfunding itself and the perks and donation base really fits a niche at the lower end of the market. Granted, you can be a Pebble Watch and raise $10 million. Actually, in the United States, you couldn't raise $10 million in crowdfund investing because we have a $1 million cap. But this will solve a problem, not for everyone. As we've learned, I think, in the last 3 hours or so that we've been at this, the crowd actually does show up with a bit of wisdom, and they're discerning in how they decide to deploy their money. People look at investing in a very different light than they look at it saving money or just giving money. So we're excited to see the initial thoughts that are coming out of this and how people will be able to solve this funding void for the ideas and the companies that can really do something different in their cultures and societies.
Thanks again for the opportunity of being here today, and certainly, again, not as academics, but as entrepreneurs who've raised capital, as people who have a strong vested interest in the success of this initiative, we're really happy to be here today. Certainly, as we traveled to other countries, been to about 20 in the last 18 months working on this issue, most recently in Malaysia for the Global Entrepreneurship Summit, and met with the Securities Commission there. And I think that one of the messages from that experience that I want to share with you is for people who are like, well, but this is only, how will this actually spread to developing nations? How will this go to other places? We sat down with 2 different groups within the Securities Commission, had a total of 4 meetings over 3 days with them, and they have thought deeply about this issue and are really looking at legislation and rolling out regulation. This is a very real opportunity for them and for a number of other governments and institutions that we're looking at, because they have tried everything else. And have spent a lot of time and energy on looking at ways to enable entrepreneurship. And it all gets done except for the funding piece. And so that's why we think this is such vital work. These numbers are just probably already out of date since they're a few weeks old, looking at the number of platforms globally. I think that one of the things for me that I think will be interesting to see is how these numbers will change and begin to shrink as, at least in the United States and some of the other early movers, as the market begins to more orderly form. I think that we'll find the market will find its level, and I think what will be interesting to see is the curve of those companies as you see them consolidate in maybe in some of the developing countries early on, and they may begin to grow in some of the developing countries. Now, one of the things that we have talked a lot about as in our work has been about this crowdfunding ecosystem. I think a lot right now, people are very focused on this concept of platform. We see, and I think if we look at what's happened in other industries in the past, where you've seen a platform begin, one could look at that as a social media platform like Facebook. One could look at online advertising platforms as a place where people go to do things. Around each of those examples, and in any other platform example, you have an ecosystem develop around that platform. So with Facebook, we know with Zynga, with Uber, with Yelp, with all these other services that are sort of feeding off of the social network. Online advertising platforms. Same thing has been true in the development of new services to maximize the value of those platforms. We believe, and we're already beginning to see this in the United States, and I think in other countries will soon follow, is this formation of ecosystems. This opportunity for there to be companies and services that are going to fulfill needs in the market that exist today. So beginning with the needs of a public market. If you look at all the things that are needed in a public market to make them function, escrow, title, transfer, legal services, accounting services, investor relations, those are all going to have to be created in some form that scales into a crowd. The same thing will be true. We'll also see services that don't exist today in public markets that will be created for the crowd because of the social dynamic that exists there. So there's a lot of opportunity for innovation within this space, and I think a lot of opportunity for study, academic study, in this space as well to watch this ecosystem develop. Obviously, all this has to happen within a regulatory environment, an environment that allows sort of the stability and predictability for a market to grow. But really what we're seeing is this transparency and trust that comes from this crowdfunding ecosystem, comes from this crowdfunding infrastructure that allows for people to grow their communities beyond just the immediate friends and family. So the community changes from just a community of location or relationships to a community of interest, community of origin, community of geography, and then be able to exchange capital and have the potential for a financial return.
We like to bounce back and forth. I usually don't like to stand next to him because I'm so much shorter, and I usually have to control this. By the way, there is executive summaries for the report, and Sam and Anthony have them in the back there, I believe, that they can pass out later on. So you can all leave with an executive summary of that. And if you want to get a download of the report, I don't know if it's live yet, but it will be under that website at the bottom there. So. What we want to do in this chart here is just really sort of lay the framework for where does crowdfunding fit in. If we look at how technology's developed, and we've got the internet, Web 1.0, and then Web 2.0 is the social network. Now we're moving towards this period of Web, what we call 3.0, where the social network meets community financing. And we use the friends, followers, and likes on Facebook and Twitter, and we turn those into money. Dollars to help fund people with creative ideas. All of the institutions that have provided a solution to the funding void that has existed for other people still play a role in this ecosystem. This doesn't replace anything that's out there. I probably should have mentioned in the slide before, we really believe that crowdfunded investing is the on-ramp to really more traditional angel and VC investing. And part of the work that we're doing right now is looking at the signaling effect of crowdfunding for follow-on capital from angels. And we're already seeing a correlation, a direct correlation between companies that are successfully crowdfunded and those that can go out and get capital from people that said no to them before. So in this graph, we're just really showing you that you've got a need for the Grameen Bank. Kiva can step in with more capital, but as we apply the social network, we're able to raise money from people in a donation or perks-based format in smaller amounts. Could be a lot, but I think we're learning that there's going to be bands of capital that people are used to raising money in. We think the real opportunity is as we move up in the upper right-hand corner, where we have more people using their social network, where they need more capital, and that's where crowdfund investing comes in. The debt or equity has been an interesting discussion along the way. I think we see the opportunity for debt financing with what we call Main Street America businesses. These are people that have businesses, I should say, that have customer and cash flow. Okay, those are the ones that have been most affected by the banks cutting back their lending, and they don't really have anywhere to turn. So debt-based crowdfunding platforms we think are going to be a great solution for them to go to an engaged community of customers and say to them, hey, Loan me some money so I can expand, do whatever I need to do for my business. The equity-based solutions we think are going to be really focused on a lot of the technology companies, people that have exits. Investors are not stupid as much as some people would like to believe they are. But we believe that you can look at this opportunity, investors will decide whether or not there's a good exit opportunity for them in this. And those companies that have the potential for an exit will be good candidates for equity-based crowdfunding. Okay, so by the way, we are summarizing this 100-plus page report into 30 minutes, so we are moving very fast. This graph right here was meant to look at variables that already exist in the marketplace. There's great data and great trends, and we can understand what's going on in different countries by looking at statistics like entrepreneurial finance, economics, and international development. And so we went to variables that have those data, and we looked at regulatory factors, social media engagement, cultural variables, remittance inflows, informal investor rates, and venture capital flows. And what we wanted to do is we wanted to take all of those indices and we wanted to look and see where crowdfunding platforms have popped up and compare the growth of crowdfunding platforms with each of these indices to see what trends are developing. And what we can see, the propensity for crowdfunding to succeed based on these variables. And so when we ran this regression analysis, we found a few interesting things. One, you would think that the internet would be the most important thing that you would need to do this. But in reality, it's the social network that is the most important thing. That is the most highly correlated point to crowdfunding success. So the good news about that is we can be in countries that don't necessarily have 100% internet penetration, but have the ability for crowdfunding success because they have a high social media engagement. Another interesting point on this would be the face-saving part. A lot of times we hear, and in entrepreneurial circles, when they're talking about what it takes to be an entrepreneur, you have to have the ability to risk. You have to have the ability to fail. And people say that's what's great about the United States. We're entrepreneurs and we're willing to fail. So Richard had alluded to the fact that for the last day and a half, there's been an event here where we've had amazing people from the Middle East talking about entrepreneurship there and how we can unleash the potential in the Middle East. And one of the questions came from someone saying, you know, how is the Middle East going to handle the fear of failure there? That's been, part of the whole culture. And the panel all looked at him and said, maybe 2 years ago that was the case. But over the past 2 years, we've learned what failure is like, and we are determined to succeed. And by looking at a cultural shift that can take place in 2 years, culture shifts don't take place in a short period of time. Where you've got countries that are in revolution, where you've got high unemployment, where you've got people that are looking for alternative solutions, you have the potential for things like crowdfunding to come in and provide them the opportunity to seek new things for themselves. And so that's what we're excited about this. And in the report, it goes into all those other variables as well.
So probably the top legal mind in the U.S. on crowdfunding is Doug Allenalf. He'll be speaking next after us. And one of the things that, in the number of conversations we've had with the SEC on this topic over time, that he said is that, look, crowdfunding is interesting because it gives us the opportunity to not just do things as good as we've done them in the private markets before, but the opportunity to do them better. The fact that we have this opportunity to have all this data online so that now there's a lot more visibility that's available, as Olav mentioned earlier. The fact that with the platforms and the access to this data, we'll be able to get much better understanding of what's happening in these private capital markets for that portion that flows through these platforms. So obviously there's a number of risk mitigation techniques. I want to be clear that we're not saying that this is the order of the risk techniques to take in order to achieve zero risk. We're just sort of demonstrating that these are some of the categories of risk mitigation techniques that can be valuable, and that we think that this is, again, another great area for academic research to look at how we will, how different risk mitigation techniques will be used to maximize their value for investor protection over time. I think also, again, looking at these elements that are involved in making this vibrant ecosystem, there are a number of categories. Certainly economic regulation is important. Being able to have, as David Bolhat from the Bank of England mentioned earlier, something that is prescriptive light but data heavy, something that allows for enough structure for certainty, but allows enough oxygen for a functioning market to perform and to form is really important. Obviously, from a technology perspective, again, social media by far and away the most important thing, and the fact that there are now opportunities for the social web to be leveraged for new innovation that will drive better transparency and better communication. Looking at this entrepreneurial culture, I think that it opens up new ways for the entrepreneurial culture, not only in countries where it may be strong, but also where it can be accelerated. Because again, the last step has always been, how do I get funded? And usually the answer was then you go to angels. And as most of us know in this room, there may be angel investors, but they're probably not making the angel investments. And so how do we use technology and use this culture of entrepreneurship to grow that? And then finally, community engagement. I think one of the things that we've seen over and over again is the ability to have putting a campaign online. I think one of the other, again, the research we saw about the quality of video, how important that is, and how important the writing is, was very interesting, because certainly we've also seen that the campaigns that succeed are those that have the most engagement, the ones that have the most robust planning and the most active follow-up. And the most, because demonstrating that authenticity through engagement is really, really important. And so I think that how entrepreneurs and investors engage will be fascinating. I think the thing that hasn't been talked about as much, but will be now, I mean, likely we'll see Title III rules next week, and we'll see what those look like. But what happens post-funding? How does that communication occur post-funding? How are we going to facilitate that in a way that scales on the social web, that allows the entrepreneur to continue to focus 98% of their time on building their business, but also allows them to be communicative and transparent to drive that next level of funding, whether it be through crowdfunding or through angels or VCs? And so as far as recommendations for what we see as opportunities, as we speak with folks about how to enable this type of work in developing countries. First, literally looking at how we can craft exceptions to securities regulations that may exist, or how to drive a whole new path for securities regulations. This is really a huge opportunity for the developing world, we believe, to leapfrog the developed world. I think earlier we had a gentleman from Europe talking about 30 securities regimes times 30 times 30, and I think that's going to really slow down Europe's adoption of crowdfunding. I think what the opportunity exists in the developing world, where there may be less stringent regulation, is the opportunity to not create regulation that offers too much openness, but the opportunity to craft this new kind of legislation and regulation that offers the chance to leverage the technology to drive the transparency and the oversight that they need for investor protection and capital formation. And also then from a social perspective, from a recommendation standpoint, this is really where we have to leverage the power of social media, of bloggers and other tastemakers in the country to be talking about this sort of thing. The opportunity to not only build capacity for crowdfunding from the entrepreneur side, but on the investor side. There's some fascinating types of work that's being done in a number of countries. I'll give you a couple of examples from Latin America. One, in Mexico, there's a campaign called Pepe y Toño, which is this campaign that really looks at how do we create, and it's a cartoon that talks about entrepreneurship. The fascinating thing is the main target of the cartoon is not the kids, it's the parents and the grandparents, to teach them that being an entrepreneur doesn't mean I couldn't get a real job. It meant that I'm going to build a business, and this is a good thing. And so, that certainly is important. Another example that is addressing some other issues in Colombia is called I'm a Failure. And what they've done is created a YouTube campaign that basically takes some of the most successful people in the country and has them go on and say, and I'm a failure, famous sports figure, maybe a famous politician, and really talk about those issues and explain that failure is a part of being successful. And then the other thing that I think would be valuable for governments or other third parties that are looking to foster this growth in their countries is really driving dialogue. One of the things that we found was important in passing the legislation in the U.S., and we certainly stress in other countries the same thing, is engagement and showing up and coming up and bringing a solution to the table. Because for a long time, people just complained about lack of access to capital to small businesses. But when you come with a solution, then you can engage people, whether they agree or not. You can then have a dialogue about it and make the idea better and try to drive the agenda forward. And so certainly that's one of the things we always recommend is bringing these sorts of ideas into these sort of circles, creating thought leadership conferences, creating policy roundtables to drive the debate.
Quickly going to talk about the last two, technology and culture. In the report, on that prior slide as well, we were talking about these are variables that are necessary in order for the ecosystem to evolve and for people to go in and really build successful businesses and crowdfunding to succeed as well. The technology, believe it or not, is there. You've got people like Catarse. You can go and open source crowdfunding technology. We tell governments already, listen, solutions are there that you can buy, build, or white label. The technology is getting better and better. There's been very few times in history where we've had a start date for an entire industry. In the United States, equity crowdfunding hasn't gotten going yet. However, an entire industry has already been built. Portals are up and running and waiting to go. You've got third-party providers, as Jason was talking about, that want to plug into the system and help in that transparency and the investor relations tool. All of that is a very important part. The technology's there. We need to show governments and regulators how they can leverage that technology to their benefit. It's important, though, to go in with your eyes wide open and realize that this isn't a one-fit solution for everyone. Every country's got cultural sensitivities, as we heard earlier. In the Middle East, debt crowdfunding is not an option, so we have to go with equity-based crowdfunding there, and so you have to build policy that works for the culture in which you're actually trying to implement this. If you go within the ecosystem itself, and one of the charts that we have in the report is what we call this constellation of trust. We've got all of these different players that are working together in the crowdfunding ecosystem. You know, I believe in the middle of it, you have the investors, not necessarily the entrepreneurs. I'm sure people, and maybe this is a paper to talk about, is it the entrepreneur that's at the center of the constellation, or is it the investor that's at the center of the constellation? But how do we have the different components of it plug into it? And so that some of those components are, how do we leverage where we're going as a collaborative community to engage people in this process so they can build businesses? So we have incubators and accelerators, but what about co-working spaces that are popping up? These are communities of people that are coming together to share their ideas with other people, to collaborate, to build businesses. We need to figure out how we can layer on crowdfunding on top of that in countries all over the world so that they can build businesses as well. And most importantly, I think is, and we've seen it in talking about it, and I was tweeting about it earlier, is a participation of women. I think women are one of the most underserved communities in the financial arena. They start amazing businesses. They are very accountable with what they say they're going to do, and they follow through. It only makes sense that we should be able to provide them equal access to capital. And I believe that with this report and what we're trying to do, we can actually help governments help women live up to their birthright and actually go out there and build some successful businesses along the way.
So really a lot of this is going to take new models. And certainly public-private partnerships can be one of those models. I think one of the things we've seen, it was funny, this morning there was an entrepreneur who said, actually, I don't want the government or the public knowing anything what I'm doing. I'm hiding from them entirely because I want to be able to do what I want to do. But I think that there's certainly a role for government to play in providing ways of accessing capital. One of the interesting initiatives that Funding Circle in the UK is doing is they have an initiative to basically take the last 20% of loans from certain sectors on the Funding Circle site. And I've committed over 20 million British pounds to that effort. They had tried every way to browbeat and beg the banks to push money to SMEs, which hadn't worked. And so because it didn't, they went directly to Funding Circle to drive that capital. I think it's a fascinating model and one that'll be interesting to see not only, again, from an academic research perspective, what happens with them in the short term and over the long term, if that makes a difference in how governments act over the long term. Again, accelerators and incubators that have been really on the rise over the last few years. There are a number of these institutions and organizations around the world. And one of the things we're very excited about is beginning to look at this with the World Bank on their climate innovation centers. The last section of the report really looks at this in depth and really looks at, more specifically, how can you use crowdfunding to accelerate an accelerator? Are there ways to use crowdfunding as either a way into the accelerator, as something to use to raise funding during the process, or as a way to help you exit the accelerator successfully? Certainly that's one of the issues we hear a lot about, is that people get into these accelerators but aren't able to find the funding then to exit successfully into the mainstream. And so how can crowdfunding be applied in different ways at different times to be able to increase the overall success rate of these businesses? Finally, really new financial structures. People have talked about cap table issues and why would sophisticated investors want to follow on? And now we obviously have the single-purpose vehicles that are being used by a number of the platforms. My argument is, convertible debt has not been around since the dawn of man. It was created to solve a particular problem. And so we will see other new financial structures that will be created to solve, whether it be how to move a crowd into an orderly mass, or how to move people through the whole capital stack. So that's going to be a really fascinating thing for us to watch, and I think also for more academic study.
So earlier you heard Anthony throw out the money shot of this is going to be a potential $90 billion global marketplace annually. It's always fun when a huge multilateral organization like the bank asks you to estimate the potential size of crowdfunding globally, and you don't know how to start. However, we are entrepreneurs and we know where people pull money from when they make their investments. So we took what we learned about how people make investments and we applied that to what the potential for crowdfunding could be globally. And we looked at ways in which people already qualify for investing. And so we looked at the number of households that are capable of making crowdfund investments, because not everyone is. You have to have a certain amount of savings put aside. And so we looked at the average amount of people that invest in the markets and what kind of savings that they would have before they put money into the markets. We also looked at the amount in US dollar equivalents using purchase power parity. So if you haven't studied up on that, we can give you a little primer back on that in the report, and how that money is available to invest in crowdfunded securities. And then we looked at the money investors have already deployed and how much of that they're willing to take out of their savings or their current investments and put into crowdfund investments. Because just because of this opportunity existing doesn't mean that people are going to take all of their money and dump it into this into crowdfund investments. And so from that, we were able to put a band on there based on social media penetration. Because early on, I was telling you the number one propensity for crowdfunding to succeed will be the number of people in a country that are using social media. So on this chart here, you see in the pie charts the percent of social media integration that's going on in a region. The call-outs are the dollar amount for potential that exists in that region for crowdfund investing. So what we want to say about this is the higher the penetration of social media, we believe the closer that we will be to that dollar figure for the potential market size. So this is speculative. I will give you that. We encourage other people to come in with another academic rigor and look at it from that point of view. However, if we do get this right, I would like a prize. That's all I have to say. And to put a little bit of this into comparison for you as well, $90 billion a year globally might seem like a lot of money. But if we look at the global savings rate, it's about $6 trillion. So that's about 1.5% of what people already have in savings. If we look at from a diaspora point of view, money that's remitted back to countries, about $372 billion was remitted in 2011. That would be 25% of that. And this is money that could possibly go into businesses now. So it's probably smarter capital going into good investment opportunities. And then if we look at the global VC opportunity, it was $51.7 billion in 2013. $90 billion marketplace would be 1.8 times that. But you might be thinking, well, why is it going to be bigger? In reality, if we consider a pyramid, and people were talking about this earlier, where you've got VCs at the top of the pyramid, it's just like 1 or 2 VCs going into a deal. And then the middle strata is your angel investors, and they might syndicate out a deal to more people. Well, VCs deployed about $26 billion last year. Angels did about $60 billion. It only makes sense when we look at the bottom of the pyramid now, when we've got all these people coming in, that we can have a $90 billion marketplace. Oh, I know Richard wants us to wrap this up, so all I'll say is that these are the bans for the individual regions, and you can learn more about that in the report.
So finally, just real quickly, just a couple of quick examples of what we're seeing in some of the regions. These are just a few examples. One of the interesting platforms in Africa is called Homestrings. You may be familiar with them. They're an infrastructure-based platform. So it's an ability to drive diaspora investment back to Africa. And it's in making investments in infrastructure projects. According to their CEO, they've been able to drive $25 million worth of investment back into these projects. We heard earlier from Qatarse about the success that they've had in Latin America. In the MENA region, we also heard from Shekra and their accelerator-based approach to crowdfund investing. Also, Eureka is another platform based in Dubai that has been able to raise an initial campaign of about $100,000 from 23 investors through their single-purpose vehicle issuance. And then finally, in South Asia, we're beginning to see the very beginnings of growth in crowdfunding from a rewards-based perspective. There have been 7 or 8 platforms that have been launched in the last few months there, and the funding levels that have been successful have been on par with average Kiva level raises of in the $800 to $1,000 range. So again, thank you all very much for your time today. I don't know if there still is time for questions, but we do appreciate the opportunity, and thanks again to the Fung Institute and to the World Bank.
Yep. 5 minutes for questions, if anybody has any questions.
What's the correlation between the acceptance of a nation and its regulatory complex to accept crowdfunding and its sort of rank in the world economically?
I'd probably point, did everyone hear that? It was about the correlation between a country's propensity to crowdfund and its regulatory structure?
Their acceptance of introducing sort of a new regulatory complex for crowdfunding.
Right.
How willing are they to make changes?
I'd probably point to Malaysia as the example for that. I mean, Malaysia is in need of jobs. The government has already gone down the path of trying to craft regulation for crowdfunding. And so you wouldn't necessarily think a country like that would be one that would be jumping on crowdfunding. So we're seeing, I think what we're really seeing is the countries that are facing the most need for jobs are the ones that are being the most proactive in terms of looking for solutions.
Just a quick build. I think that was a brilliant question. It sparked the World Economic Forum results in terms of innovation by country. There's very specific longitudinal research. It'd be really interesting to take that index by country and correlate this to this, because one of the key things I know for CEOs is they look at that index as a nation. So that might be another vehicle to help educate something that's extremely proven, right? And to correlate that just to help amplify things out. So just a thought.
Thank you.
I'm just wondering, given the, I guess I want to say inability of sub-Saharan Africa to mobilize and a culture of angel investing, how governments think that they're going to create a culture of crowdfunding among the non-wealthy?
Well, I think a couple of things come to mind, and again, this is speculation. One is a lot of times angel investment, the people who may be called angel investors are typically more focused on wealth preservation than wealth growth a lot of times. And so I think if you broaden the spectrum to people who may have made investments in more traditional asset classes and want to put a small portion of that their portfolio to work in a higher risk investment, they may choose to. I think that the growth in mobile payments and social in sub-Saharan Africa is I think that's now that e-commerce and just commerce generally is being done through M-Pesa and other sorts of platforms, I think is really fascinating. I think that it'll be interesting to see to the extent that investments will be made by similar kinds of means. So I think we'll see.
Yeah, the only thing I would add to that is it's great to work with an organization like the World Bank that can act as an honest broker in this and help us craft regulation and policy that can allow for cross-border flows. So while someone in sub-Saharan Africa, a community right there might not be able to completely fund an idea, there's diaspora dollars and there are an engaged community of people in the United States and the UK all over that would like to send money back to back to their homelands.
Yeah, and that's really going to be an interesting area because everywhere we go, it's about looking at how do I engage my diaspora in making investments back home, every single country. And so it'll be interesting to see if that is what drives a different approach to regulation globally around allowing those kind of money to flow.
One more question, we gotta go. In the back? Yep.
Okay. You commented on the necessity for overcoming the stigma associated with failure for crowdfunding to succeed. And I'm curious, given that and that is certainly a great barrier to entrepreneurship in many countries, and given that crowdfunding is a particularly public form of advertising that one is trying to start a venture, how would you see crowdfunding enable this getting over this barrier of stigma of failure?
I think that true entrepreneurs who have a burning desire to start a business will crawl through broken glass to make it happen. And if you give them a path to raise money, they will figure it out. And they will blow through those sort of barriers, because before there just wasn't any. Before I had to go to the angels and on bended knee. Now I can have a mechanism to access a broader community more easily and more effectively than ever before. And I think that you're right, they will have to push through that. I absolutely agree with you, but I think that it will be another filtering mechanism for which entrepreneurs are truly entrepreneurs and which one, and I think it'll be a great filtering mechanism for professional investors.
Thank you. So those are two non-academics that just did a massive amount of research. So let's give them credit for their work.